All right, this is Event Trader jumping on here. Jim is going to be jumping back in. I think we might also be joined by Scott as well. We're going to recap some of these earnings that we have out overnight and this morning. Take a look back at some of the price action and some of the names. A bunch of volatility going on there. So, Jim and Scott, are you there with me?
Yes, I'm here. I'm here, Gavin.
All right, gentlemen. How's the morning treating you guys?
Well, I mean, so far so good, I guess. I haven't stepped in the mud on anything today. I've been taking things pretty quiet. I don't really have a whole lot else going on. Really, more or less, just watching the action. There was one thing that I laid out, potential. A trade that I may be looking at next week in the SPY. So really, preparation, recap, sniffing out ideas is my approach for today.
Yeah, for me it's AMD. I mean, I'm pretty happy with this. It's got that breakout. It's actually extending over 31 here. It's just a nice, clean chart. I mean, you look at this thing over the last, say, 52 weeks or so, and it's just awesome. It's always nice to see relative strength outperforming and jumping on board those leaders from the liquid momentum focus list when they do that.
Yeah, no, looking good there. So, obviously, a number of earnings that have been out. Jim and I were cut a little short on our morning piece with Draghi, so wanted to circle back around, take a look at some of the results and some of the price action. So, gentlemen, you want me to just start throwing out some names and we can kind of go from there?
Sure.
All right. First, one of the ones that's been popular, of course, on our feedback page, and that's Cloudera. And not a lot of good things to say about this quarter here. Obviously, we had the beat by 10 cents and reported the revs in line, but Q2 EPS also reported in line, revs below consensus, and we got the news that the CEO was retiring, which is never a good item. There's been a lot of execution risks on this one in the past, which we were pointing out before the earnings yesterday. Take a look at the color on the quarter if people get a chance, and analysts are certainly out negative on this one. The Needham downgrade was really just sticking out to me, as they said they were loath to downgrade a stock at already 52-week lows, but they weren't really presented with any sort of a decision to do anything else but downgrade it. They saw the CEO departure as a thesis changer, and a lot of the metrics, including a new product launch, were pretty alarming for the analysts. So we've seen this stock chop down to 5. Scott, I know you threw out the 5 psych level as a balance play, but you guys interested in chasing the value down here, or are you kind of with me in terms of there's going to be winners and losers in this cloud space, and certainly looks like Cloudera is going to be a loser for the time being?
Yeah, look at that. The psychological $5 mark got probed, and sure enough, price bounced back a quarter for a decent scalp trade. So somebody on feedback actually took the trade right at $4.99 and flipped it out. So kudos to you for taking that trade. That's not my style. I guess over the years, 20 plus years looking at the markets, I know what I feel comfortable doing. I am not a scalp trader. However, there are tricks of the trade, and I always try to share those, especially around the key psychological levels. The $5 one on these free falls always tends to just be one that I've seen over and over and over again over the years. So kudos to you on that trade there. As for otherwise, I have 2 major criteria for when I personally trade. I rarely trade stocks underneath $20, and I rarely ever touch stocks that are under $10. I am part of that market camp that says the stocks that are trading low are doing such for a specific reason. Now, there are some caveats to that, obviously. If you have a name that's been dormant for a very long time and it's squeezing and it's hot and you have that momentum and it's in an uptrend and everyone's chasing it, and that's a whole different scenario because there's that upward momentum and that hype surrounding the story. But for a value investing name, when I look at a chart and I see month after month downtrends and sitting below key moving averages, 50 days, 200-day, 20-day moving averages, and just underperformance in the sector itself and the overall broader market, and it's single digits, you could not tell me, you can't sell me the story of how cheap these stocks are on a valuation basis, because it just tells me that there's no real institutional money behind it. And I don't have the patience to sit in these names for quarters and years on end and wait for some sort of turnaround play. I prefer to focus on much shorter term movements and names that are already in a more of a better trend. To go after those types of plays there. So for a stock like this, I see no value down here. To me, it's dead money.
Jim, any thoughts?
Well, when I first heard about the CEO retiring, I thought if there is a kitchen sink type quarter, then this is probably it. It's the closest thing you're gonna get. How much worse could it get than the CEO retiring? They were already operationally terrible, so maybe they bring some new leadership in, maybe some activists get involved and want to shake things up. So this might be that type of that kitchen sink quarter that you like to highlight sometimes, Gavin. I'm not going to do it. I did like Blue Chip's idea, and I know one of our listeners out there got involved, so kudos to you. I'll stress that when Blue Chip highlights these little day trade ideas, even if he doesn't take them, they tend to work out pretty well. So always be on the lookout for those things. So that's my endorsement. More for Blue Chip's analysis on day trades than this stock in particular.
The real question is, why don't I take them if they work so well all the time?
Well, I think, what would work for me, man? I need to hire a clerk. I need to hire a clerk to find these trades that I can't make myself, because I'm busy doing this, and you're looking through charts, and I know your game. You've moved away from the day trading, and it can get very overwhelming and cumbersome, especially when you're stepping away from your bread and butter. So therefore, if I need an apprentice, I think.
I have to be in I have to be in the mood to day trade, if that makes sense. And usually it comes after a nice string of winners, and my account's been building up, and I'm feeling like I got that capital to, take those types of trades on. But when I'm in more conservative mode here with the market the last couple of weeks, and I know it's more of a choppy environment that's going to favor day trading for the volatility's sake, but it's just my mind's not there. And that's a key thing as a trader. You have to recognize that some days you don't have to be so gung-ho, trying to scalp everything, every single tick in and out, and trying to find every opportunity. I like to. Maybe it's me just getting older in my age that I just tend to now be more reserved and just watching, and then like I said, the opportunities are there. I've been watching the market for 20 plus years. I know how it behaves, and I can see the psychology and the pain and greed and fear in stock price action, and there's definitely opportunities there that I'm going to share all the time. But for me to take those trades, like I said, it's my own psychological hangups that I have to deal with. That sometimes I take them, sometimes I don't.
All right. Next up, we're going to move over to Elastic, ESTC, another one of these cloud software as a service companies. This is one that I'm kind of interested in because a lot of these cloud plays, they had mixed guidance, and a lot of these cloud plays we've seen get really hammered on such an outlook. Their EPS was a little bit below expectations, but this downside guidance wasn't due to any negative change in the underlying demand or from a lack of execution, but rather just reinvestment. We saw the company was also making a acquisition too in order to help boost growth. There was a little bit of a deceleration on the growth side, but it still remained pretty strong, and they did guide their FY20 revs above consensus. So I was expecting, given some of the results we've seen from other cloud plays along these lines, for this to get chopped down. But it comes back to our discussion about some winners and losers, and ESTC Elastic certainly looks like a winner at the moment. It's holding this 80 area despite that guidance. A lot of people were hoping for a return to profitability. That seems to be being pushed off a little bit at this point, but I kind of like that price action that I'm seeing right now, considering I was expecting to see this one in the low 70s when I walked in this morning.
Yeah, Jim, you want to take this one? Or
Well, for me, right now, it's no man's land for me, only because I don't really see a compelling level, at least on this daily chart, and it hasn't really traded that long to get anything that I really find compelling on a weekly chart just yet. But, Gavin, if you will do me the honors and make a – actually, I can do it. So what I would want to see hold on one second. Let me get a line. And – it's being a little finicky. All right, so this trend line that I have, I would want to see this one get above it, and that would be constructive behavior for me. And if it does, then we've got the low, what I deem is a falsifiable low. I'm going to steal Chart Trader's term, but that low for today, if that holds over the next coming sessions, we consolidate, we get that coiling opportunity, we get a close above that trend line. That would be the compelling trade for me. So I'm not too far away from it. I would just prefer to wait for the confirmation.
Over the next couple of sessions?
No, it doesn't have to be today. It wouldn't have to be today. Over the next week or two, ideally some type of consolidating pattern, consolidating around the 83, 84 area, and then we get above that trend line. That would be where I would be enticed, and then I can make a decision that, okay, now I see the bullishness, and that I don't have to just guess where I think the low might be. I would actually feel like I have confirmation that the low could potentially be in place.
Yeah, as for me, I don't have too much of an opinion on it because I don't know the company that well. But if anybody likes the story out there, so you have basically a muted response to earnings. I mean, the stock tried to break down to fresh June lows here, but it actually managed to find some bids there. So it's already just tipped its hand about where your risk parameter would be right along the March, April, and June lows here that come into play around $79, $78. So if you like the story and you think it's consolidated enough here the last 3 months in a tight range and it's due for some sort of renewal of volatility or uptrending action here, you clearly have a nice spot here to start a position. And I think, again, that's only if you like the story. So taking a starter position here, a 5% risk is going to give you down to about, what, 76 or so? 677 or something like that. So you have 5% on the trade on a starter position. That's no harm, no foul there. But then, like Jim said, I wouldn't add to it by any means until it actually started to break out above that downtrend line off that February high and the May high and start clearing 85, 86, 87. And then you add it on to, you scale into that trade on the way higher. And that's the only way I would play it if I really was interested in it.
Okay. Next, we are going to take a look at Five Below. I had an interesting reversal in this one earlier. So, the results were decent. There was some concern about the EPS as the company had mentioned some of the tariff impacts that it was seeing. And I think that's likely where some of that selling pressure came. I believe that was on the call, but I'd have to double check that. Did see it hold this 118 level and is bouncing back to 120 at the moment, but definitely not liking the way this chart's shaping up right now. Could maybe see a bounce back to the 130 area if this continues to get going, but I'd be a little cautious in this one. Certainly not performing as well as some of the dollar stores that we saw, so maybe over the dollar is the threshold of where people want to be buying things here. But you guys got any thoughts on Five Below and this intraday reversal that we saw early on?
You got to lump this into the group with Dollar General and Dollar Tree, DG and DLTR. I would even say Walmart and Target to some degree, larger cap plays to discount retailers. If you like the names, and these names tend to find safety bids and safe havens when recessions hit, because the assumption there is that the consumer is going to be flocking to these lower discounted stores. I know there's an inverted yield curve. Is that still going on? I don't even know, but
I don't think anymore.
did they go back?
Well, I believe the 2 and 3 year have both dived back below the 10. So I'm not sure across the
It's on the
entire belly
verge,
of the
yeah.
curve, but
It's been right there the last couple of weeks, and everyone, whenever that happens, the recession word gets thrown around a lot because there's never been a recession without an inverted yield curve. However, has been an inverted yield curve that has not led to a recession because they've turned right around. So it's really just a matter of just paying attention to that. But these names, like I said, they tend to be more defensive, deep discount retailers. If you like the stories and you think, and I would say, have you been into one of these stores? And if you've been into one of the stores and you like what you see, then yeah, by all means, if you think it's got some growth potentials and everything else, I think it's okay right here around 118. It is pretty impressive that it did find support right around that 200-day moving average zone, 118, 120, and the March-April lows there. So you have that line in the sand. Let's go with above $115. So if you like the name, you can buy some in here. Again, starter position, and you're risking, what is that, 115 would be about another 5%. So these are all just basic, I wouldn't say any of these are real short-term trading opportunities right now, but if you like them as potential investments, I think you have very low risk entry points on these reactions to earnings.
what says you, Jim?
I don't like it. I don't really find anything all that compelling. Yeah, show me a weekly or a monthly, maybe.
Hold on a second.
Yeah, mind you, I'm not putting my money into these either. My philosophy. I'm always focused on those.
5 looks a little more interesting on a weekly chart.
Yeah, it does. It does. Yeah, that's not bad. That's not bad. Yeah, I don't think I'd do anything with it. But that is one of the type of things that I do like to see. I would have loved it if this would have been the first time. See if we go back to 2017, and had we not breached that 50-day moving average back in December, then this trade I really would have loved. But because we did, it doesn't have like as great of a it doesn't have that concrete hold. It may, but I would have loved it a whole lot better if it didn't cross over that 50-week moving average in December. So it's good though. Yeah, I do now see a if you are involved in it, it would be okay because you're only risking like $2.50, a little more than $2.50 for nice upside.
All right. Next up, we're going to take a look at MongoDB, ticker symbol MDB. This is similar to Elastic for me, in which, given the results, which were good, but I mean, definitely a deceleration from what we saw in the blowout Q4 that really drove us higher. Just as a quick heads up, it looks like chart traders out shorting some July crude here at 51.52, risking 35 ticks. So with MongoDB, this is another one that I was expecting to see down lower here. I was a little surprised that they held it up at 140. Now, again, it was a good quarter, just wasn't on par, and given some of the concerns around the valuations on this name, I thought we might see a little bit more profit taking. But 140, they're fighting to hold it here at the moment. So what are the key levels you guys would have on your radar? And I know we haven't really seen too many intriguing day trading opportunities, but do you have any interest in this one, as this does tend to be a little bit more volatile?
You can feel this one first, Jim, if you want.
Well, if I was going to day trade this one, I would be leaning to the long side. This has that coiling pattern, and it basically there's been no disruption in this since the last quarter. I'm guessing that this gap up was the earnings from March. Earnings from March. When does this one report again? I'm guessing mid-June. Are they one of the earlier ones?
They'd be early September, basically.
Oh, okay. So this one just reported yesterday?
MongoDB,
okay, that's right. MongoDB did. Okay, yeah, good. All right. So this one, Yeah, I would be looking for day trading opportunities on the long side for sure. Little pullbacks where you can find good risk reward setups on a day trade, but I would definitely be leaning to the long side.
Yeah, Jim, the whole segment is about the earnings movement.
I know. I'm sorry. I got this. I was looking at.
Yeah, I know.
Commodity Trader also had added
you
to his
want to update
VE
commodity.
position.
Yeah, yeah, you're looking at the chart. You're looking at the site. I know. You lost your train of thought. It's all good. It happens to the best of us. Anyway, for me, I agree with Jim on this one. You know, this stock, we mentioned this, Gavin and I, yesterday afternoon. Really nice sideways action, relative strength the last 3 months or so since that last earnings report back in March. Finding support, say 125, 130-ish over the last couple of weeks there, trading back above the 50-day moving averages, leading growth name on the emerging growth focus list for quite a while there. And then this is basically what I talk about with earnings all the time. You want to see whether how the stock responds. Is there a disruptive gap that's in play here? And you look at the price action, and yes, it is wild, but that's because there's a low float and it's just a wild stock to begin with.
High short interest too.
High short interest, etc. So point-wise, it's all over the map, but bigger picture, there's no disruptive gap in play here. It seems like the response to earnings is somewhat expected or in line based upon the sideways range of the last few sessions. So what does that mean going forward? The trend is your friend. I'm going to go with that. The trend's your friend, and that 130 support level that's been in play here since the last quarter is huge. And if you like the name, this is a name you're going to want to continue to favor on the long side above that 130 support level, expecting it to break out because new highs, what is that, right above the March area, which is 150. That's like a stone's throw away. That's easily going to be taken out if the market continues to enjoy this one. Plus, I also mentioned too to Gavin, take a look at the monthly time frame of MDB. It made its debut in late 2017, so it's only about 24 months or so, maybe a little less, like 20 months of data. But on a monthly time frame, I mean, if you can't spot accumulation here.
Parabolic.
To some degree, yeah, but it's paused, and that's the key thing, is that you have to, after they make these parabolic moves for 3, 4, 5 months, you have to, is it an immediate sell-off 2 or 3 months later, or is it a continued consolidation pattern? And if you look at the price action here, we have 3 months, again, on the chart there, of this sideways type of ranging activity with those long wicks off the 125, 130 area. It's just it's about identifying your risk in context of a bigger picture trend, and I just laid that out for you. So I like the potential here a lot, but if it starts to break underneath these 3 month supports at 125, 130, you're obviously going to be out money, and you need to cut your loss.
Hey, one more thing I want to add to this one is, when we talk about looking at the broader market and we're looking at the opening range breakout, this is one of those stocks that I think outperforms when the market is going to move higher. So when you have the what I'll call that easy trade, right? When things look, or we'll break it down and say, look, the path of least resistance is to the upside today, and it would take something, something pretty, a pretty big catalyst to break things down here in the market. That's when you go to a stock like this, MDB, and you have, okay, this is one of the stocks I'm gonna go to the long side and trade from there on a day trading perspective, because I think this will outpace the index on any given day, and it just sets up, it has that more juice to it. So when we talk about, instead of trading the index breakout, this is a good one to lean to get that extra juice in the stocks.
Yeah, for sure. And if you're not listening to audio, well, you're not going to hear me say this, but you're going to find your best candidates to do what Jim just described amongst the leading names that are always found on the liquid momentum focus list, which is the higher cap, more volume-oriented names that are leading the way to the upside in the market. And if you're looking for a little bit more volatility, a little bit more risk, and a little bit more fundamental edge with earnings growth, you're definitely going to want to pay attention to the emerging growth focus list under that BLUEX ticker, because those are going to be the ones that definitely get more juice to the upside when the market rallies.
Also, on the flip side, blue chip, when things are breaking down, don't try to fight it with a stock like this either, because this one can get just as slippery on the way down. So go with the flow. Use this one as, all right, this is one of the candidates that when the market's going up and I feel good about the bullish tone of the market, then gravitate towards this. But if the market's going down, don't say, well, I know MDB is a good one, so I'm going to stick to that one. It can get really slippery. So stay away from doing that as well. That's my advice.
The other thing I'd point out, when you do see a name like a MDB getting slippery, that also usually gives you a little bit of a flag for when the end of some of the selling's coming. Because it's when people are throwing in their big winners and their best names and they're just getting rid of everything, that usually marks a little bit of a part of seller's exhaustion and perhaps an end to a selling period that could be going on. So
for sure. Yeah, for sure.
I keep that in mind. Okay, next up we're going to hit a name that I know Scott hates the business model of, but really had a nice little boost today on a surprise profit. And anytime you see a name get that surprise profit, especially one with a high short interest like this, it's a 42 million float with a 22% short interest here. It tends to get a bit of a squeeze, and we saw that run it up to 31 after came in, like I said, surprise profit, but also nice revenue acceleration too, and customer acceleration as well, which has been, certainly important for this company over the last couple of quarters. Now the stock's back down, testing its 200-day moving average. And the question for me is whether or not it could hold this level and continue to apply a little pressure on the shorts right now. I think it needs to move up through 29.50 in order for the shorts to start getting concerned. I think most of them are probably in from that 35 area, maybe possibly as high as the 45 or whatever, and are willing to take this little pain from the reaction to the headlines and earnings and still sitting on it. So I don't think we've seen yet that idea of the shorts really panicking and getting squeezed at the moment. So needs to get a little bit higher for me to really like it, but encouraging to see it hold the 200-day moving average after a big pop at least.
Go ahead, Jim.
Well, we're looking at SFIX again?
Yes.
Okay. So I like this one. Well, it's a tricky one. I like it that it's getting back above that zone that Scott talks about, that the IPO opening range type zone. But with that said, it's really not at a place that I like to get involved in it yet, with the exception of with the short interest being so high. So I'm not doing anything yet.
This is a short squeeze or short crusher, whatever you want to call it. Like Gavin said, it's 40 million shares out there on the float. Over 20% of that was short going into earnings. When you have a stock that's underperforming and trading below the key moving averages of 50, the 20, the 200, and it's been a significant downtrend since the last quarter, you obviously have a very non-institutional supported high short interest name that's out there amongst certain funds, hedge funds and the like. All you need to do is get one disruptor or game changer in an earnings report or a headline, as the stock did, and there goes your short squeeze, and it's just gonna do what it does best there, which is what it did here this morning. Gapped up, tagged 30, some profit taking, I suppose. I have no opinion on it. I just don't understand the business model. Maybe I should look a little deeper into it. I don't know why somebody wants to pay somebody to pick out their wardrobe for them. I'm not a fashion guy to begin with. That's just me. So I don't know. I'm sure they sell actual clothes too and stuff, but I don't know, Gavin. Maybe you can help me out here.
They do sell actual clothes, so.
Is it their own brand or is it their?
It's their own brand, from my understanding.
Okay.
So
Yeah, I just don't get it. So
okay.
I barely. I just, I'm a simple person. I just wake up in the morning, put on whatever's in my drawer, and wait until Christmas for a new a new tie and a new shirt and sweater, a new pair of jeans for my birthday or something like that.
Yeah.
So
Okay. Seeing the market taking a little bit of a downturn here, so we'll keep an eye out on that. Brett's noting the comments from President Trump with regards to Mexico not moving fast enough. I disagreeing a little bit with him on that. He was saying similar comments earlier this morning when we were moving higher. So, but what I do see here is that 28. 35 to 40 area call. I know we didn't get up quite that high, but just kind of playing a little bit of resistance here at the moment. So, perhaps the two coupled together, but those Trump comments, he was making similar ones yesterday afternoon and also earlier today. So we'll keep following that story as it plays out. But next up, we want to take a look at Signet Jewelers, ticker symbol SIG, which kind of has fallen into that whole Cloudera pivotal, pick the name that's getting hammered right here, and that falls into it. I mean, they were talking about the negative impact from tariffs. They get 30% of their merchandising from China, so that's obviously going to continue to hit them. A decent quarter, but caught up in the trade wars here, and just a name that I still don't see much value. I would have liked to have seen us get back above 20 perhaps, based around these headline numbers we're seeing, and this thing popped up to 20 and is reversed right back down, and it's back down to lows, and it just looks like an ugly name to me, another value trap play. You guys got any thoughts on Signet here?
Exactly like you said, Gavin. I mean, I know I sound like a broken record, but there's a reason why I keep emphasizing this. Stocks that are trending below the 200-day, 50-day, 20-day moving averages for multiple months and underperforming the broader market and their sectors are not. There's no money there. And as the metrics get better on the accounting basis, they become value traps. Avoid them at all costs, especially when they're breaking down to 52-week lows and whatnot. I just can't emphasize that enough. Even when you think they've gone too far, like a stock like this, I think was trading once at $150. Now it's trading down around 17. You're not going to find the bottom in these stocks. I have been through the bear market of 2000 to 2002. I have been through the bear market from 2007 down to 2009. Stocks don't come back. It's brutal. And when you have names that are just underperforming like this and not holding up when the rest of the market's going higher, I don't know what you're doing. I mean, you got, like my dad used to say all the time, like, you need to have your head examined. So
Do you have any thoughts?
he was a blunt man. So
as are most East Coast fathers, right?
yeah, right.
Jim?
No, I don't see anything all that compelling on this one.
The dividend's compelling. That's it.
Yeah, but that's not
Until
my
it gets
style.
cut.
I mean,
that's a value trap.
The dividend was compelling on GameStop too.
Yeah.
So, I mean, show me a monthly chart maybe. Yeah, I don't see anything about this one.
Even uglier, actually.
Yeah,
Right.
this yeah.
Put your money in Tiffany's. It's better higher end. The wealthy always go to Tiffany's. They're not running out to Jay and Jared's or whatever else this company owns.
All right.
I'm telling you, man, my theme has always been millennials don't get married, man.
Yeah.
That's why Bed Bath & Beyond is no good anymore.
All right. Next up, we're going to take a look at the optical space with Sienna. Telecom equipment still looking hot right now, and this had a pretty nice pop up here. We can see that monthly looking good, daily looking just as good too on this one. But we are seeing 45 come into a little bit of resistance here. The other interesting aspect of this too is, and we can take a quick peek at them, some of the other optical names in the space like NPN or LITE or IIVI. None of them are really seeing much of buying following the Sienna. They raised their guidance, had a nice strong quarter there, and one of the better earnings reports that we've seen over the last couple of sessions here. But a little cautious that 45 is kind of acting as a brick wall right now. Any thoughts from you guys on CIEN?
Well, I wouldn't do anything in this one unless it came back in and tested the at least close to the gap zone down at like 36, 37. I would not chase it here. It's just really not my style. There are times when I will buy breakouts and whatnot, but not when the stock's up 25%. So I would wait for some type of pullback. I'm just not interested in this name at this point.
Yeah, so I'm not doing anything with this name today, but it made it back on my radar of potential trading opportunities here going forward for the summer. Reason being, I would say that this gap is disruptive, and again, I love when earnings come out. I mean, actually, I have a love-hate relationship with earnings overall because they always cause gaps. They ruin the charts to some degree. However, they do yield a lot of information about where the bigger players are positioning themselves. So, with that said, this is a stock that had been doing extremely well over the last 52 weeks. You can go back over to last May, and you could see this was in a steady climb all the way up until about February, and it was really just a phenomenal mover that was on the list there. Then it started to lose some of that footing there the last 3 months or so, and then even more so in May, it undercut the 200-day moving averages. Got defended below that level at 33, and then it started to consolidate, and now it's actually gapping back up to the upside to what I believe it would be almost a fresh multi-year high. Yeah, I mean, this stock used to be back in the heyday almost 20 years ago, a high-flying name, and now it's just recently in 2018 breaking out to decade highs. So this stock is definitely on some sort of turnaround path here. I like the fact that it gapped up back in last September in response to earnings. It gapped up in December in response to earnings. It struggled in February like the last quarter, but now it's on that turnaround mode there. So I have no position in this stock yet, but I am definitely keeping it on my radar to see how it continues to respond here in coming sessions above the $40 to $42 gap support level that's going to be in play there, and I might be dabbling on it as a trade in coming weeks. So definitely a new name that's made it on top of my list as a stock near its multi-year highs, very little resistance above, and has all the things going right for it.
Jim, any thoughts?
Yeah, I gave it a little earlier. It's just not something that I really like to do with I'm not going to chase it. Maybe down the road it gets on my radar, but for now I'll just let Blue Chip take this one.
Okay. And then finally, the last two, we'll take a quick peek at the home product names. Home, H-O-M-E, and Kirkland. Both of them really poor quarters is evident there. Again, I think this just kind of falls into a space that you don't want to have too much to do with right now as this gets cut in half. Downside guidance, I'd want to take a little closer look before I started getting involved in this one. But definitely an ugly name, ugly earnings, and not much of an interest for me just at the moment in this space.
Yeah, I mean, again, I can't. If there's ever evidence of why you should avoid stocks in multi-month downtrends below their 200, below their 50-day moving averages, I know I am repeating this, and people know this, but man, everyone, it's just crazy how people just look at these names and they see the cheapness and the absolute price itself, and they see value and everything else. Avoid these stocks. Avoid them. I can't stress enough. There's so many better opportunities out there in names that are actually in uptrends and trading higher and have better stories out there. Find those. You have to pay up for price. Think of it as a piece of jewelry or a car. You can't you have to pay up in price. That's why I always trade higher price stocks, typically above $50. The better quality names are already moving higher, and they will continue to go higher. The cheaper names, you're buying just cheaper quality, cheaper companies, poor management, blah, blah, blah. You should know the story by now. Avoid these.
Yeah, you're not going to find much from me on this one. I mean, maybe, Gavin, if we get to a point where on a daily chart, it puts in some consolidating patterns, gets back above 10, and then all of a sudden I could make a case that, okay, this maybe we got a capitulation bar, and then we've got a consolidation, and maybe we get a run back up to close this gap. But man, that's so far in the future. It's got so much work to do on a charting construction level that I won't even look at this one probably till next quarter again.
And that's the thing, Jim. You know me. I like looking for names like this that get beat up. But yeah, no need to be a hero and be the first one in, because this could continue to keep going down. But come back in 3 months if we start hearing things about a turnaround, about changes at their stores or whatever, and the stock's acting and just slowly on the rise, that would be something that would maybe get me a little bit more interested. But looking at both Home and KIRK, definitely not in a hurry to be a hero on either one.
Oh, and KIRK's even worse.
Yeah.
I mean, goodness gracious.
Yeah. So anyway,
I mean, is this company going out of business?
I mean, that's what it looks like here for sure. I'd have to take a look at the balance sheet on these ones, but yeah, until you saw that, you're probably better off looking at the debt than looking at the equity right here.
Yeah, for a while there, I thought this name was associated with Costco because Costco has all those Kirkland brands, but this is completely separate, obviously, right?
Yeah.
Yeah.
So, all right.
Okay.
Well, I think that's going to do it for this segment then. If any, nothing really compelling as far as a day trade, but I think there's a few names out there that we'll be keeping an eye out on. Sienna, MongoDB, obviously. So, we'll keep doing these exercises, see if we can uncover anything. But obviously, we're not trying to force trades here either, just because we're going over these names. But hey, Jim and Scott, thanks for jumping on with us here, and we'll talk to everybody shortly.
All right, cool.
Thank you, Gab.